Hi, welcome to Main Street Macro. I'm Neela Richardson, and today I'm joining you from this lovely hotel in Nice, France, with this great view of the ocean. And what occurs to me, I know I'm economist through and through. What occurs to me when I match this view with what was in the news on the economy last week, there's one thing that's consistent on both sides of the Atlantic: the impact of higher interest rates. Here are the three things affecting both the US and Europe when it comes to higher, for possibly longer, interest rates. The first effect is that inflation is slowing. So, good news: central banks have raised rates. They've raised them aggressively, at least over the past year. And it appears to be working because inflation is coming down. And in fact, we got some news from Germany and Spain showing that inflation for those countries was less than economists expected. And so, for the whole Eurozone, there's this idea that inflation is coming down from its peaks, though still a little bit elevated. In fact, if you look at the 30 countries that make up the OECD, the impact would be going from 7% inflation in 2023 to about 5% next year. So, still too high for comfort, but a lot of progress, and hopefully in that comfort zone by 2025. Now, the second effect of higher interest rates is not so great. It's slower economic growth. The OECD also said that it expects that economic growth will slow a bit in 2024 compared to this year, and then increase a little bit in 2025. Now, emerging markets are actually leading the global economy. Where you're seeing growth slow down the most is in Europe and the United States. These economies are much more financially sector driven and therefore much more sensitive to those higher interest rates that we talked about when it comes to certain aspects of the business. Now, speaking of business, there's one more impact of higher interest rates that we should take note of, and that's corporate profits. You see, corporate profits have been on a wild ride since the pandemic. Year over year growth in corporate profits surged in 2021 to 15% from the previous year. And then in 2022, they fell back to a more consistent pre pandemic level of around 4%. Well, last week we saw that corporate profits have slid again downwards to about 0.5%. There's many reasons, but higher interest rates is definitely a factor which increase the borrowing costs of these corporations. Now, coming into next week, actually this week, we are going to be talking about the labor market because in both the United States and in Europe, a healthy, strong labor market has been something that has carried the economy forward. So while interest rates have had mixed results on the economy, the labor markets still seem to be going strong. Well, thanks for watching the Main Street Macro. For more information on the week ahead and those very important jobs numbers released by ADP on Wednesday, please check out adpri.org.